Well, last week in the stock market was a bloodbath to say the least, and I wanted to jump on here real quick just to go over where my thoughts are and where I believe the market is headed. We're going to look at some key data points that might give us a better indication of where we could be headed, because typically November and December are pretty bullish months overall in the stock market, but doesn't mean that that has to stand true every single year. And then we're going to jump into some earnings that are on deck for next week. Most of the big companies have already reported, but there's still some pretty popular names. And then I'm just going to touch on a couple stocks that I'm keeping my eyes on for next week as well. I'm going to try to make this video short, so let's jump right into it. So first things first, as I was mentioning, here is some data that could indicate where we are headed. So you can see here that this is the S&P 500's return after a greater than 15% return by October, right? So by the end of October, the stock market was up more than 15%. You can see down here that we were actually up 16%. You can see all these years, right, when the stock market did this, right, where we were in November and then where we were in December. And then if you just look at the last 2 months as a whole, you can see that every single month except one, the stock market was positive. Now, how much? Obviously some of these were very little negative and very little positive, right? But nonetheless, it was positive. So I thought this was pretty interesting. Again, history tends to repeat itself. It doesn't always have to, though. And then another thing that I wanted to look at real quick, too, was just Tom Lee and his thoughts on the market. He's been making a bunch of predictions, and he's been fairly right on most of his predictions, at least here of late. He believes that the stock market is actually going to hit 7,500 before the year ends. That is extremely bullish, in my opinion, considering the stock market's already up, 15, 16%. But nonetheless, that's what he believes. And he did make a video on this, and he mentioned that, we could see a bumpy ride in the beginning of November, pretty much during earnings and all the volatility. And then he expects it to, continue higher after so. And then he expects the market to continue higher, not long after that, maybe the first or second week of November. So that's pretty interesting, and we'll see if that comes true or not, but indication that the market will continue higher even though things are overvalued. We also have the government shutdown that should be coming to an end at some point. That will probably be bullish for the market. You have Jerome Powell that's supposed to be getting replaced, and if it's up to Trump, he's gonna cut interest rates even quicker, and that could be bullish for the market. And so there's a bunch of catalysts that are coming up that could also send the market higher. But nonetheless, we are in one of those environments to where, God forbid, one little thing goes wrong, then the market will just collapse off a cliff, right? At least that's how it seems to be. But real quick, let's look over the earnings that are on deck for next week, and then let's jump into some technicals. I'm going to look at the Qs and the SPY as well, so we can look at some key levels to keep your eyes on, to where, you can put pretty much an alert there. And if we break these levels, that's very bearish. And then obviously if we break up higher, that's very bullish. Nonetheless, some popular names for next week. We have Rigidity. I believe that's how you pronounce it. It's been a very popular stock, though, very bullish too. It's actually could be a decent dip buy at this point, because it has seen a pretty significant pullback from where it just was trading not long ago. You have CoreWeave, another very popular name as of late. It's been a new IPO. You got Nibius. That's another one that I've heard a lot of people talk about. Circle, another new IPO. You got Cisco. You got Disney reporting. Again, not a ton of huge names, but depending on which companies you own, one of these might be yours, or maybe you've had your eyes on some of these companies. But go ahead and obviously take a screenshot so you can have this on deck, or you can go to x.com and just go to Earning Whisper, and they usually provide these fairly easily there. Nonetheless, again, I'm trying to make this video short, so let's go ahead and jump right into the technicals, and we're going to look at the major indices right now, right? Because obviously we just looked at some data points that could tell us we're going higher, but let's take a look at the SPY. Okay, so you can see here that we actually just bottomed out here, and this was Friday. Most of the day Friday was red, and then it started to bounce there towards the end, which typically when the market turns green and is pretty bullish towards the end of the day, it continues into the next week. And so again, you can see though history tends to repeat itself, right? Or patterns tend to repeat themselves, and you can see that there's a lot of times where we'll get down to the 200-day moving average and then bounce and bounce and bounce and bounce, and then there's a few times we'll reach the 300-day moving average and then bounce. Okay, so I was mentioning those levels to keep your eyes on. Shall we break this level? That would break this bullish structure, and that could mean we're going to see some more downside, at least for the short term. And you can see here that we bounced, but now we've bounced right back up to these moving averages. This is also has been some support here in the past. So now the question is, are we going to bounce and then make a lower low, right? Or are we going to maybe just see a little pullback and then continuation up, right? So this is a pretty key level to keep your eyes on, because again, we've seen this huge bounce back up to support, right? Typically when you start a downtrend, that's what happens, right? It breaks the pattern initially and then comes back up to retest those levels, those EMAs up here, and then continues lower. So this is a key level to keep your eyes on, but obviously this is what we do not want to break. If we come down and make a higher high here and then continue higher, nothing wrong with that. And then so obviously nonetheless though, if we break up above here, then we're going higher as well. So it'll be interesting to see how the market plays this tomorrow, if we just continue to rocket ship up or if it continues to be pretty choppy, which is what I would expect. And then real quick, let's just take a look at the Qs. Very similar chart here, okay? You got obviously pretty much touched down here on the 300-day moving average. Again, the SPY did the same thing in the past, and we are also bouncing up. Not quite to those averages yet, but nonetheless, we are at a pretty key level of resistance, right? That was previous resistance, and when we broke out of that, it went up pretty high, broke right back through it, but again, we're back up to that level now. So again, key levels to keep your eyes on. That's one reason why I want to make this video, just to keep you guys up to date to where my thoughts are, and just as a technical standpoint, right? What to keep your eyes on. Because obviously, the market, I mean, when it comes to the economy and whatnot, you've seen it, right? I mean, we're overbought, overvalued. The stocks just keep going up and keep going up. There's no rhyme or reason to it, right? I mean, honestly, there's not much to support it. Earnings have been pretty good, don't get me wrong, but when it comes to the economy and the jobs data and this and that and all the government shutdown and all the negativity, the tariffs, right? Market just continues higher. So we are getting in overbought levels, but that does not mean that the market can't continue going even higher. I will say this though, I am getting a little more weary myself, to where I might start trimming some of my positions, assuming that we continue up November and December. Start trimming some of my positions just to stay a little bit more cash heavy in the event that we do have a market pullback, because eventually, right, it's going to happen. Recessions happen. It's part of history. It's part of the stock market. How bad they are, we never know. Where the bottom's at, we never know. You can never really time it, right? But you can just try to prepare yourself as much as possible. But other than that, Meta is a stock that I made a video on. I'll leave the link right up here if you want to check it out. But I mean, the stock has continued down, but you can see that we just filled this gap right here, right? And we pretty much are bouncing off some pretty serious support here. And if we zoom out a little bit, yeah, we have actually broken that 300, but you can see that that's happened before here as well. But still in that uptrend, right? This is a huge buy in my opinion, though. I'm not gonna lie, I bought this a little too early. I should have waited for this gap to get filled, but Meta's reported earnings before and it's dipped and then immediately shot back up the next day. So you really never know how to time these things. Nonetheless, this is definitely one that I'm keeping my eyes on. SoFi, that's another one that I really like that has pulled back recently. I don't know. Then again, we had a big shot up, but I do want to see where this one continues, right? Because we're in this big bullish trend. I would love to see this thing pull back. Obviously, if you're a SoFi holder right now, that's not what you want to see. And, don't hate me for that. It's just that fact that I don't hold a position right now. Obviously, I've made some trades on the way up, but I would love for this thing to pull back and to take a position. And then, let's see, AMD was another one as well that I was looking at. Again, I've been taking trades on this. It did come down and hit a pretty key level. Well, not quite yet, but we did break structure here, okay? We broke structure. I would love to see this one come back down to here, okay? and semiconductors have been pretty bearish of late. So it'd be interesting to see if we can make it down here. Obviously, if the whole market continues up, though, I don't know if I foresee that happening or not. Pinterest, I just made a video on this one. I think this is a good opportunity as well. And again, I'm making this video really short, just throwing the ideas out here. Again, I've already made a video on this, so you can check this one out too. I'll leave a link up there at the top. I think this is a great opportunity. Obviously, we saw a nice bounce here when the market was bouncing as well, but still at pretty low levels. And then an even juicier play that this is actually one that I really want to buy next, and that's SMCI. You can see here, I mean, this has been not the best performing stock of late, but this is also like the only semiconductor stock that has not gone up to all-time highs or broken all-time highs, right? Like the only one that seems like it's lagging. It's currently trading at a 23 price to earnings, and for a semiconductor stock, that is pretty low. I mean, they still are making a lot of money, and they still play a big part in that industry. But they had their earnings. Earnings was not that well. And then on top of that, we had the selling pressure from the market. And I just think we're starting to get to some pretty juicy levels here. Yeah, obviously, if we could get down here, that would be very, very good pickings. And then we have the trade desk. Obviously, I'm not super happy about this one because it's not performing so well. It actually had good earnings, good guidance. They raised it. It's just sometimes it's never enough for the markets. I still think this is a pretty good opportunity though, and especially for like a longer term trade or even a shorter term trade. You can see that we wicked way down here on earnings and then actually went positive and then right back down. I mean, just very, very volatile. But because I do hold a position in this stock, I am keeping my eyes on it. And then DraftKings is another one. I know I'm doing way more than I wanted to, but I'm just going through these quickly, right? DraftKings, though, also had earnings that weren't as well, right? They actually lowered guidance, did not meet expectations. This thing has shot right back up. I will say that we are at a point of rejection, right? So this is going to be a key level. If you're in the position, you could look at taking some profits here, assuming maybe you bought the dip down here, just because you could see this trend, right? Every time we get up to this moving average, it breaks or, typically falls back down. At least that's what's been happening. Now, vice versa, if we get above here and break and hold, then that's going to be a little bit more bullish. This gives you a better picture too, right? Like we want to try to get back up above this moving average up here, and arguably even a 300-day, but, we want to get back up here, right? We want to break this this bearish structure. So either way, another one that I'm keeping my eyes on. I could talk all day about stocks. I mean, there's a ton of opportunities out there. I just wanted to touch on a few that I've been looking at. So I hope you guys found this video helpful. I hope you enjoy your Sunday, and I'll see you next week.